Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video we're going to be taking a look at the Forex Market Wrap. Going to highlight some of the news this week and some of the charts that we talked about in our videos. So it was a very heavy news week. We had a lot of red folder data this week, and typically when we see weeks like this we can see markets such as the US dollar or the Japanese yen gain some strength. Now we didn't really see any of that, to be honest, which was quite a shock. Markets were a little bit weird this week, considering the amount of data that we had out. We didn't really see too much in the way of aggressive moves, which was quite interesting. Maybe it's just because there was so much. They were almost cancelling each other out maybe this week. But the really important data was all the US data that we had. So first of all, we had the CPI data out of the US, which started to show a slowdown in the inflation rate. We saw inflation come down from 7.7% to 7.1% on the year, and then we saw the inflation rate come down from 0.4% to 0.1% on the month, and we also saw core CPI data come down from 0.3% to 0.2%. So triple whammy here really for the CPI data, and that then just backed up the Fed in their latest federal funds rate decision, which saw them hike interest rates by 50 basis points. But in the press conference after, Jerome Powell basically talked about slowing down the pace of tightening and continue to express that although the fight against inflation is not done, they will do it at a slower pace, although that may lead to the actual federal funds rate being a lot higher than previously expected. So we're now seeing the predictions that the Federal Reserve federal funds rate may even increase towards 5.1% by the end of 2023. So that's going to be quite interesting in the market, and the market took that fairly negatively. We did see a little bit of downside to the dollar, but then it did recover towards the end of the week. So that was quite interesting, and that was despite poor retail sales data as well. You can see down here, retail sales data or core retail sales fell from 1.2% to minus 0.2%, and we had the retail sales fall from 1.3% to minus 0.6%, but they were already predicting pretty negative numbers anyway. In other central bank data then, so we saw the Swiss National Bank hike interest rates from 0.5% to 1%. That is now the third consecutive rate hike from the Swiss National Bank, and the Swiss franc has actually performed really well this week off the back of that data. We then have the Bank of England, who also announced a 50 basis points rate hike from 3% to 3.5%. However, you can see here the MPC official bank rate votes only came in at 702. So actually there are a couple of members here that didn't think that we needed to hike rates again. So that was quite interesting to see. So maybe in the next meeting, the Bank of England will bring down the pace of tightening again. Maybe we'll only see a 25 basis points hike in the next meeting. We then followed that up with the ECB, and the ECB announced interest rate hikes of 50 basis points as well. So again, it's kind of what I was talking about earlier with this cancelling out situation. And Euro actually performed pretty well off the back of that, because the President Lagarde basically talked about the opportunity to keep increasing rates by 50 basis points due to the battle against inflation in the Eurozone. So are we going to see some further hikes there? And that's really what's propping up the euro at the moment. We also had some decent data out of the manufacturing PMIs. You can see manufacturing PMIs here out of Germany, and flash services PMIs did pretty well. So you know, that's other factors going into the decision by the ECB there. So let's go take a look at some of the charts this week. Get onto the fun stuff. Now, we can see here that the US dollar index, what we were targeting this week was the 103.50 handle. We did eventually come into that 103.50 handle on Wednesday ahead of the announcement from the Federal Reserve. Federal Reserve announcement came out. We saw a price rebound to the upside here. So we're now starting to see price work within this slight bearish channel, which is a strong consolidation heading towards key levels of support. So if price continued to remain within this channel and maybe came down to this trend line support in here, that could be a big signal to say price could start pushing higher again. Alternatively, if we break out of this area, trade back above the 105 handle, I think that could lead to further upside into the 108s. But price is not really showing us that buyers are here at the moment. We're still sticking within this sort of range at that, and we've got to think if the data is going to continue to be poor out of the US, then maybe the dollar index could continue a little bit lower. Pound US dollar also traded within a bullish channel, very similar to the dollar index. You can see price bouncing between the channel highs and channel lows. We actually did a video about price breaking through into new highs into the 124 handle, and we did say the risk here is that price is at this bearish channel high. So ideally what we'd want to have seen anyway was a move back to the channel for then price to continue to work within it. And at the moment that's what we've got. Price came down back into the 122 handle. We are trading below it at the moment, but we are finding support at previous lows and the bearish channel low. So there may be some opportunities next week. Maybe if price was to clear this daily candlestick current high, we might be able to see moves up to the 126.25. If, however, price breaks out of this, the obvious move is back down to the 1.17 handle. So yeah, definitely some interesting moves and an interesting level forming here on pound at the moment. Going on to New Zealand US dollar then, so we predicted price heading towards the 0.6450 handle again, having another retest. That's exactly what we got. We actually traded through the 64.50 handle though and came into the 0.65 handle and rejected around that area as well. Kiwi was featured on the strength meter this week as one of the strongest currencies, but in that reversal zone. And you can see here the impulses higher are getting less aggressive, and you can see we only barely broke through this recent swing high here, whereas before we've had quite aggressive moves out of those previous highs. So is this maybe suggesting here that maybe we're getting a bit of a slowdown? Perhaps maybe we'll see price break out of this trend line next week and see a bit of a move back towards the 0.6 handle. That's something to consider, despite Kiwi being so strong. Finally then, on gold, we can see that what we were looking at this week was this key level, this $1,800 level. We said this is going to be key this week going into such a heavy news week, and price didn't really do much around it. We've pretty much tried to break through it, failed, traded back below, heading back towards it. It seems to be a bit of a sort of magnet for price at the moment. Every time we're above it, we come back to it. Every time we're below it, we come back to it as well. So interesting sort of market here for gold. It is quite reacting quite well to the dollar pressures at the moment. So when dollar weakened, we broke through the highs. When dollar strengthened, we broke back through the level. So we need to keep an eye on that dollar index. If dollar index starts to take off to the upside, then gold prices are going to start heading back towards that 17.25 handle. If they don't and it stays within that channel, maybe price will take the $1,800 level out again and start heading towards that 18.75. So I hope you enjoyed all the content this week. If you did, leave this video a thumbs up, subscribe to the YouTube channel to see some more of our Forex trading content, and I'll catch you in the next video.